Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Apple report for Wednesday, August 9th, 2023. Before we jump into the charts, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues. So, on with Wednesday's daily Apple report. I like to start with the big picture, work my way in. This chart actually says a lot. I'm going to take you actually back to this chart, 169 even, this formation that we settled above several months ago, signaled longer term bullish continuation up to the 224 and a quarter rising channel top. I had been saying how it was in reach by the end of the year. I'm having my doubts on that time frame. I don't want to hold myself to it. The deciding factor will be a closing below the daily version of this rising channel bottom at 178.94 on the weekly chart, 178.89 on the daily chart that you can see right here. So holding above this does allow an aggressive rally over the next week or two, say by the end of next week, into actually, this is not the area, but I'll just use it anyway. This is still a valid resistance area in the low 190s, but I have another point in the low 190s as our upward pivot point through the rest of August. But it was the settlement, if I backtrack a little bit, last week. I believe it was Thursday of last week, we settled just below these convergent channel bottoms, setting off a 2 to 3 week sell signal into the upper 170s. That happened in about in about a day. Obviously, the earnings that came out for Apple weren't favorable, and that obviously led the way on that sell signal. But it was a sell signal nonetheless. Now we've tested the targeted support, 178.89, this channel bottom. The speed line at 181.37 has been reduced to a minor point only. It's very tradable, but it really is 178.89 that we are hinging off of as we move into later August and even really into September, October trade, because it is off of this structure here at 178.89 that we can bottom out not only into September, but even into the fourth quarter. We can rally back into low 190s within a week or two and on to new highs by, I'm not going to say the end of September, but as we move into end of August, but as we move into September trade, I think that is a realistic scenario. So let's take a look once again. Just keep in mind the 178.89 support. And this is the scenario that I see. 182.16, a steeply descending one-third speed line projected off that all-time high, actually, from a couple of weeks ago. It's dropping daily. It can contain session strength. You can see that here in the far right. And once tested, we can fall back to, the 178.89 formation on an intraday basis, perhaps 181.37 on the way up is a meaningful minor point, if there is such a term. But this is it here. This is our pivot point to the upside through the rest of the week and into next. So, after having tested 178.89, that long-term channel bottom, and closing above 182.16, that is a go with buy signal through the rest of the week and into next. Depending on volatility, this could take 1 to 2 days. It could take 3 to 5 days, but somewhere in there, I think if we close today above 182.16, I'll call this a 2 to 3 day target at 190.19. This is a new descending two-thirds speed line that can contain weekly buying pressures. It becomes a 2 to 3 day target if we settle today above 182.16. On the way up, 187.79 can contain daily buying pressures. But really, closing above 182.16, expect 190.19 within several days, where we could top out perhaps through next week by that point or into later next week. Once testing 190.19, we can fall back into the upper 170s again and climbing within a full week or so of activity. And finally, it would be a settlement above 190.19. That would tell me that we are likely to push into the 204.22 region within another 2 to 3 weeks at the most. This could be another just 1 to 2 week rally. We could vertical our way right back up into this zone. I'm not expecting it, but you and I have seen this happen in this stock before. And if we can get up and over 190.19, say between now and the end of next week, I do think we're just another week or two away from reaching 204.22. This is a new rising channel top that can absorb monthly buying pressures when tested. And if we were to settle, say between now and the end of September, above this 204.22, a rising channel top, then we're just a few weeks away at that point in time from realizing our long-term objective at 224.25. Now for the downside, we have 178.89. If we break 178.89 today, 174.59 is in reach. That's right about here on the chart. It's not a big down day. And if we close today below 178.89, I do see the 169 handle in reach. I don't think this week, but it is quite possible. I think within 3 to 5 days, by the end of next week anyway, 169 even to 169.94. 169.94, nothing more than a 3/8 downside Fibonacci on the January versus July extremes. And of course, 169 even is that long-term channel top. This zone, that 169 even to 169.94 area, is our 5-star long-term support region. And despite the fact that we may close below 178.89, and that could, under other circumstances, this is where you're putting weekly and daily charts together and coming up with some sort of a cohesive a view of the market. And so if I were just looking at this daily graph, I would have to say that closing below 178.89 would allow 151.66 over the following 2 to 3 months. Now, if you though do homework, your due diligence, and you follow the weekly chart and see what actually played out longer term, this is a backstop. This is a solid zone of support. Now, might it be violated in the weeks ahead? Sure, anything can happen. But this is still our support that I see able to contain selling through the rest of the year. And from there, we can turn higher as we move into Q1, Q2 of next. It is this scenario of testing 169 over the coming weeks that, yes, I'm still going to be pointing to 224.25 as in reach, but it'll be more of a realistic give and take on the way up rather than this sort of straight vertical move. Now, the straight vertical move off that January low, you can make a case that it is still intact above 178.89. So you must respect this market's ability to rally, in vertical fashion over the next week or two into the low 190s. So in terms of the options play, and this is the last thing I will say for you options traders, now that we're testing 178.89, you can still reach for, those 190, 189 out of the money calls that don't expire for at least a couple of weeks, or you might even reach for 204.02 out of the money calls. No, I'm sorry, 204 to 206 to 208 out of the money calls that don't expire for at least a couple of months. That is the upside play. If we do happen to close today below 178.89, I'm just expecting the 169 even level by the end of next week or sooner. So if you're a short-term options trader, you may reach for 169 out of the money puts that don't expire for at least a couple of weeks. And I think I'm just going to leave it at that. I think I've said all there is to say, past 9 minutes and counting, trying to look for a chart that I could leave you with. I think this is a good one. Closing today above 182.16, we should rally to 190.19 by the end of next week or sooner. That's all I've got for Wednesday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. Have a great day.